Okay, good morning. Good morning, ladies and gentlemen. Thank you for joining us. My name is Paul Doran. On behalf of the entire team of ELCO Management, I'd like to welcome to today's call with Megan Light and John Montano from NextDecade. Quick introduction. At ELCO Management, we specialize in separately managed account investment strategies. One of the areas that we've followed and invested in a very long time is energy and energy infrastructure. And we thought it would be quite productive for our investors and listeners here to have an LNG teach-in. The goal of today's call is for the first half just to go over the macro environment of LNG, and then we'd like to drill down into what's going on at NextDecade. So, Megan, maybe we can begin, with your background and give us maybe a brief history of LNG, in the context of your career, which began at Cheniere and now at NextDecade.
Yeah. Well, first of all, thank you so much for having us today. We're very happy to be here. Very happy to talk about LNG and NextDecade. My background is that I have about 20 years now in the energy industry. I've been all over the place, from upstream to services to renewable energy to LNG. Most relevantly, I spent 2015 to 2021 at Cheniere, working in LNG during the very early days of U.S. exports. Then I moved to a renewable natural gas company, which was later sold to BP. After that, moved back into LNG here at NextDecade, and I've been here for just over a year. So I will start with a brief history of the LNG market. But before that, I want to give you a brief disclaimer on forward-looking statements that our legal team we have to give you. So before we begin, I'd like to remind you that our comments today may contain certain statements that are or may be deemed to be forward-looking statements within the meaning of Section 27A of the Securities Act of 1933 as amended, and Section 21E of the Securities Exchange Act of 1934 as amended. All statements other than statements of historical fact that I may make, including statements regarding the future results of operations and the financial position of NextDecade Corporation and its subsidiaries, its strategy and plans, its expectations for future operations and transactions, environmental, regulatory, and legislative matters, and future supply and demand affecting LNG and general energy markets are forward-looking statements. These forward-looking statements are subject to a number of risks, uncertainties, and other important factors that may cause actual results to differ materially. Please read our SEC filings, including the risk factors section of our most recent Form 10-K and 10-Q, for additional discussion of factors that could cause actual results to differ materially. Now that we've gotten that out of the way, a brief history of LNG for you. When I was doing some research for this, I found a couple of really cool facts that I wanted to start with. It's a little bit before U.S. LNG exports, but natural gas liquefaction, or basically freezing natural gas into a liquid form, was first demonstrated by a British scientist, Michael Faraday, in 1845, much earlier than the industry we know today. The first compressor refrigeration machine for natural gas was built in Germany in 1873 by engineer Carl von Linde. Linde is still a big supply company in the LNG industry today. But the global LNG industry as we know it developed largely after the year 2000. In the early 2000s, interest in LNG grew, driven by rapid demand growth, rising gas prices, and perceptions that some traditional sources of natural gas supply were waning. Growth in demand was led by Argentina, Brazil, China, India, the UK, and Mexico. And exports were led by Australia, Equatorial Guinea, Egypt, Norway, and Oman. LNG supply was about 100 million tons in the year 2000, and it doubled to 200 million tons by 2010. In the 2010s, LNG trade continued to grow rapidly. Deliveries to Asia expanded significantly with economic growth in China and India, and the growth of gas-fired power generation in Japan and Korea. Imports into Europe and South America also expanded. On the supply side, the U.S. entered into LNG exports with Cheniere's first cargoes in early 2016, and U.S. exports have grown rapidly since then. By 2020, Australia, Qatar, and the U.S. were the top global LNG exporters, and the overall market had nearly doubled again from 220 million tons in 2010 to almost 380 million tons in 2020. And that number is despite 2020 having some negative impacts due to COVID. There were some temporary shut-ins of supply that year. As of last year, the global LNG market was over 400 million tons, with 20 exporting countries and 48 importing countries and regions in the global market. As of 2023, the US was the top LNG exporter in the world with 84.5 million tons, or over 20% of the global market. Australia and Qatar were the second and third largest exporters, respectively, each with just under 80 million tons, meaning that together the US, Australia, and Qatar make up about 60% of global LNG exports. Asia was the largest import market for LNG last year, importing about 2/3 of global volumes. China was the largest single importer with over 70 million tons, or about 18% of the market, and Japan and South Korea were the second and third largest importers. Four projects made a positive final investment decision, or FID, in 2023. That's the terminology for when a company decides to move forward with a project is FID. Our phase one was one of those four projects and was about 1/3 of the global capacity that took FID in 2023. Based on projects currently operating and under construction, global LNG supply is expected to grow by another 200 million tons, or about 50%, to 600 million tons by 2030. That will be the largest growth in the shortest amount of time that the industry has seen. So at the end of the day, by the time we're looking at 2030, the market will be about 600 million tons compared to 100 million tons in 2000, a very dynamic growth rate.
Oh, that's great. That's a great start. At ELCO, we're firm believers of an all-the-above energy policy. With, I think we consider natural gas and LNG as best of the all the above. But in this kind of traditional energy versus renewable energy battleground we're in, what is the environmental, value proposition for LNG on a global scale?
Great question. So when we think about the growth in global LNG demand that we've seen over the past 2 to 3 decades, some of that has been driven by economic growth globally, but a lot of that has also been driven by environmental initiatives around the world. Especially in the 2010s, a secular shift toward natural gas and away from coal, oil, and other solid fuels has been driven largely by environmental concerns. According to the EIA, burning natural gas results in fewer emissions of nearly all types of air pollutants and CO2 emissions than burning coal or petroleum products to produce an equivalent amount of energy. So they've stated that LNG produces 40% less CO2 than coal and 30% less than oil, which makes it the cleanest of the fossil fuels. LNG also emits significantly less soot, dust, and particulates compared to coal and oil, and produces insignificant amounts of sulfur dioxide, mercury, and other compounds that are considered harmful to the atmosphere. The cleaner burning properties of natural gas have contributed to increased natural gas use for electricity generation, industrial purposes, residential use, and transportation across the globe. Natural gas and LNG have been used not only to replace coal and other solid fuels, but also as a reliable non-intermittent base load to support renewable energy sources. Many renewable energy sources like solar and wind are intermittent, meaning that we need a reliable underlying base load to meet energy demands at times when it's not sunny or windy. And natural gas can easily fill that role. We see LNG as an important fuel within the global energy transition to a lower carbon future, mainly for 3 reasons. 1, affordability, 2, security, and 3, emissions impact. So from an affordability standpoint, LNG can be produced very economically, resulting in affordable energy for customers around the globe, including in areas where there may be energy scarcity today. From a security and diversity standpoint, having access to diverse global suppliers provides flexibility and reliability for buyers, and the robust natural gas resources that underpin LNG exports further add to that reliability and energy security. From an emissions standpoint, LNG can fill in the gaps for renewable energy quickly and affordably, resulting in emissions reductions when coal, fuel oil, and other solid fuels are displaced.
What about the competitive landscape of the LNG market? How is the U.S., NextDecade being a U.S.-based supplier, how is the U.S., an advantage supplier globally? When you look at the other suppliers, Qatar, Russia, maybe you could hit on that.
Yeah, so I think US LNG has a lot of global advantages. And one place to start is those three factors I just talked about, that LNG overall benefits from, affordability, reliability, and environmental impact. So from an affordability standpoint, the US has a massive natural gas resource that can be purchased at a low cost, converted to LNG, and shipped to destinations around the world at a total price that's very economic compared to global gas prices. Today, for example, an LNG producer can procure natural gas for just over $2 and ship it to Asia for around $2 to $2.50, getting a margin of about $9 per MMBTU compared to today's Asian gas price of $13.50. Those healthy margins are more than sufficient to support the growth of US liquefaction capacity. And it also means that US liquefaction capacity is economic, even in a lower global price environment. Typically, US projects contract their expected LNG production volumes under long-term take-or-pay contracts, or SPAs, under which customers pay a fixed fee and a gas-related fee for LNG. Fixed fees vary over time with market conditions, but in today's market, it's around the mid $2 range, which gives really good expected returns on investment that are attractive to incent additional supply in the US. So it's just a different way of really saying that we can build additional capacity here, even when global gas prices are much lower than they are today. So the US, when we look at the overall cost of incremental production globally, I will say Qatar is the lowest, just because they have essentially free natural gas resources that are very robust. But outside of Qatar, US is the low cost producer in the world.
How about some of the challenges? Earlier this year, we saw the Biden administration put through a moratorium on LNG permits. What are some of the challenges you see for US LNG?
So, I'll start with just a little bit more cheerleading for LNG, that I think there's a really good case for natural gas and LNG through at least 2050 when we look at global economic growth and environmental initiatives. We think those will drive demand for natural gas and LNG higher over time. Looking at the affordability, security, reliability, and environmental benefit of LNG, it can also play a role in filling gaps in clean energy supply. We have a slide in our corporate presentation that takes a look at the EIA and its clean energy scenarios, and it shows that the world is underinvesting by hundreds of billions of dollars every year on clean energy, which we think will likely lead to some energy gaps in the future. And LNG and natural gas are a really great way, an economic, reliable way to fill those gaps. Now, that said, when we say what could be some challenges to LNG, and specifically US LNG, we look at feedstock, we look at transportation, we look at regulatory developments. So I'll kind of take each of those and take them apart a little bit. I don't personally believe that natural gas feedstock will be a challenge for US LNG. We have such a robust natural gas market here. It's over 100 BCF a day market, even at today's low prices, like in the low $2 range. There's a lot of resource that can be produced at $2, $3, $4 that I think, US LNG will have that supply for many, many decades. From a transportation infrastructure standpoint, there is sufficient infrastructure today to support a lot of LNG. There will be incremental infrastructure needed. We've seen some increasing challenges for pipelines, especially interstate pipelines. Intrastate remains a little bit easier because it doesn't fall under FERC jurisdiction, but there has been increasing environmental pushback on infrastructure, both pipelines and LNG facilities. And there have been some challenges, but we've not really seen anything in the what I would call the southern U.S. Gulf Coast LNG corridor. We've not really seen anything not get built or not be able to operate because of this pushback yet, but it's something to keep an eye on. I would also say that the market for incremental U.S. LNG supply is very, very competitive. It's always been a competitive industry, but recent price pressures and inflation has made it increasingly difficult for greenfield projects in the U.S. to be able to take FID. Brownfield capacity like our trains 4 and 5 and like many other expansions that firms have in the U.S. often has an advantage because it can share existing infrastructure like tanks and berths and roads and buildings. So there's an economic piece to building brownfield capacity. That said, there's not all that much brownfield capacity in the US. So we'll see, moving forward if the market, increases those long-term contract rates to be able to support greenfield capacity again. And finally, recent regulatory and court decisions could make U.S. LNG development more challenging. Historically, there has been bipartisan support for LNG, but we have seen some bumps this year that could make LNG in the U.S. look less reliable and riskier to global customers. So first, the DOE announced in January that it would be pausing non-FTA authorizations for LNG export facilities. The pause has greatly limited the number of projects that can move forward with FIDing incremental capacity and building out that capacity. Typically, these FTA and non-FTA authorizations from the DOE have to be in place before you can finance a project. We did see the DOE grant of a 5-year non-FTA authorization to New Fortress's Altamira facility in Mexico last week. So that's kind of an interesting development, and we'll see how that evolves over time. I'm personally hopeful that it's a little bit of an election year ploy and that we'll see some resolution after the election, no matter who wins. We've also seen some decisions from the DC Circuit Court, including one that has impacted our facility. We'll talk about that a little bit more later, but the DC Circuit Court has recently vacated and or remanded several FERC orders, which is unprecedented, and it puts risk around not only energy infrastructure, but all infrastructure. It's setting a precedent that federally permitted facilities could have their orders vacated while under construction or, perhaps even while operating. So it's a risky place to be. And overall, it's really bad for the industry because not only will infrastructure be harder to finance and to build, but it's going to impact how global customers view U.S. LNG and potentially other infrastructure projects. So really any legislative or regulatory unrest in the U.S. is bad for the industry, and we want to see all of those resolved as soon as possible.
No, I mean, listen, I think even in light of the recent, policy changes, I think the globe views the U.S. as a guarantor of global energy supplies, especially LNG. I mean, you hit a little bit before on, who the import leaders are, but, maybe you could hit on where are the contracts coming from, especially in light of, Russia basically, shutting off the pipelines to Western Europe. Where are you seeing the interest for, the renewed interest for LNG globally?
Yeah, so when we think about LNG demand, there are really two different sets of participants. One is buyers of LNG, and the second is the ultimate end users of LNG. So earlier I talked about, where the LNG is ultimately going, which is, primarily to Asia, China, Japan, South Korea, a lot to developing Asia as well. India, Taiwan, Thailand, Pakistan have been strong demand centers for the past few years. We've also seen increasing supplies go to Europe, especially after the Russia-Ukraine conflict began. Russian gas has been very limited to Europe, like you said. So the market has seen a situation where that increase in European demand for LNG on top of Asian demand for LNG has pushed prices up. And so today, JKM is about $13.50. I would say 5 years ago, we would think that $8 to $9 was a really good international gas price. So we're kind of in a new world. But when we're thinking about contracting counterparties, A significant portion, like I said, of US LNG is sold under these long-term SPAs. Those SPAs typically focus on investment-grade counterparties because that's what's needed to make the project financeable. And these investment-grade counterparties come from all over the world. For example, for phase one of our project, we have 9 investment-grade off-takers. They're based across Europe and Asia. And for train 4, we've been working with Middle Eastern counterparties as well. So, these contract counterparties can be end users like Guangdong Energy in China, Engie in France. They can be portfolio players like Shell or Total, or they can be trading houses like Gunvor and Trafigura. So portfolio players and trading houses often act as a credit sleeve for certain buyers in developing countries that might not meet their credit requirements to sign their own long-term SPA, like, for example, Pakistan entities. So, when we look at the market, what we're seeing today is that, end users, portfolios, and traders are all out in the market, supporting long-term SPAs. The geography remains diverse across Asia, Middle East, and Europe. And so I think we'll continue to see that diversity in counterparties. But as I tell people a lot, it's very hard to handicap, your next SPA when you have a whole group of counterparties you're working with. It's very hard to predict who will sign the next one, where they'll be from, and what sort of counterparty they will be. But I think when we think of US LNG overall, we will see a mix of customer types, and we'll see a mix of customer geographies.
I've seen, the lead times on building liquefaction, but what does the gasification, the regas, market look like across those different regions?
So the regas market is pretty robust. So I think, today's LNG market is about 400 million tons, going to 600 million tons in the next few years. There's over 1,100 million tons of regas capacity, I think, in place today. That might be a number that's in place today or under construction. But all to say, regas around the world is not a constraint for growing LNG exports. We are seeing new terminals be put into place in both Europe and Asia. And the timeline for regas construction is much shorter. So your LNG facility, I would say, takes anywhere from 4 to 6 years, perhaps more, depending on where you're building in the world. US Gulf Coast, I'd typically say 4 years. Your regas is going to be somewhere between 1.5 to 2 years, I think, most likely. So, regas can move quicker if it needs to for incremental LNG supply.
Great. Well, let's move on to your day-to-day at NextDecade, and maybe you could give us a brief description of what the company's doing, how it started, and we can kind of just move along from there.
Sure. So high level, we're an LNG developer focused on developing more sustainable LNG with lower expected carbon intensity through project design, responsibly sourced gas, a pledge to use net zero power, and proposed carbon and capture and storage to meet growing global demand for cleaner gas. So we're developing the Rio Grande facility on South Texas. It's on the Brownsville Ship Channel. We permitted 5 liquefaction trains for up to 27 million tons per year of LNG exports. Phase 1, which is the first 3 liquefaction trains, is under construction and has been under construction since July of last year. Trains 1 through 3 are expected to become operational in late 27, mid 28, and early 29, respectively. For phase 1, we've contracted about 92% of expected LNG production under long-term take-or-pay SPAs, with 9 investment-grade counterparties, like I just mentioned. NextDecade owns a 20.8% economic interest in phase 1. We're also developing trains 4 and 5. We expect to make a positive FID on train 4 and/or train 5 once we have commercial support, EPC contracts, and financing in place. For trains 4 and 5, we will have an initial economic interest of 40%, going up to 60% once our equity partners achieve a certain return. You can think of that as an effective equity flip structure or equity bridge during construction. Beyond the first 5 trains, we think we have room to further expand at the site, and we anticipate in the future we'll permit train 6, 7, and potentially a train 8. We really take what we believe is a pretty conservative approach to our business model. So we have, we're working with Bechtel on the EPC side. They're unparalleled in their track record on the Gulf Coast. Everything they've built has been on time or early and on budget or under budget. So we've de-risked construction as much as we can through lump sum turnkey contracts with them, where they bear most of the risk of construction. And then with our highly contracted cash flows in the future, we think we have a very visible line of sight to 20 years of predictable cash flows.
Maybe you want to, kind of go into the regulatory process that you're dealing with, and how you see that kind of unfolding going forward.
Sure. So in early August, the U.S. Court of Appeals for the D.C. Circuit issued a decision against FERC, holding that as part of FERC's reauthorization of our facility, they should have performed a supplemental environmental impact statement, or EIS, that addressed some updated and expanded environmental justice analysis. And as part of that decision against FERC, the DC Circuit Court chose to vacate our FERC order. That decision by the court will not be passed down to FERC to be implemented until the appeals process is complete. So we'll come back to that in a minute. But the 3 primary points that the court ordered FERC to include in its updated analysis are: 1, expanding the radius for environmental justice analysis from 10 miles to 30 miles, 2, including data from a second air quality monitoring station, and 3, considering our proposed CCS project in the analysis of our liquefaction project. We don't agree with this decision. We're pretty disappointed in it. And as I mentioned a little bit earlier, the precedent that this sets has the potential to impact all federally permitted infrastructure projects, because it's going to make it really hard to finance projects until a final unappealable permit is in place. So from our perspective, we're committed to taking any and all available legal and regulatory actions to ensure that we can continue to construct and deliver phase 1 on time, on budget, and safely, and that, FID of trains 4 and 5 will not be delayed any further than they have to be as we work through this process.
So, where does that kind of leave you, in the construction process? You've already moved some dirt on the ground, and you've begun that process. So where does this kind of leave you?
So today, construction on phase 1 continues. We are taking a 2-pronged approach to seeking resolution in this case. 1 is the appellate process. The second is working with FERC on a supplemental EIS. Ultimately, resolution here will come from the earlier of a favorable appeal outcome or a completed supplemental EIS, after which FERC will reinstate our order. So, the DC Circuit Court will not mandate that FERC vacate our order until the appeals process is complete. So that means as long as the appeals process is ongoing, we can continue to construct phase 1. We do plan to appeal at the DC Circuit Court and petition for a rehearing. I can't believe it. Sorry, it was yesterday or the day before, but we just received a 30-day extension for that appeal deadline, which basically gives us 30 extra days to prepare the appeal and to continue to construct the project while we're working through the appeals process. So now the appeal in the case will be due on October 21st. We will file on or before that date. The appeals process at the DC Circuit Court, we think, will take anywhere from low number of months to over a year, depending on whether or not the court, grants extensions, asks the plaintiffs to respond, rehears oral arguments. There's several factors that could really change how long that timeline is going to be. But as long as that timeline is moving, we will continue phase 1. If we are not successful at the DC Circuit Court level, we are going to appeal to the Supreme Court. When we do that, we will request a stay from the Supreme Court that will also allow us to continue construction while we work through the Supreme Court appeals process. As most of us know, that is a much slower process, so that could take anywhere from several months to multiple years. So while we're working on the appeals process, we will also be working with FERC on a supplemental EIS. Our role in that is somewhat limited, as we just have to provide information and responses to FERC's questions as they undergo their analysis. But I would say that what they're doing in this case, which is, expanding radius of environmental justice, adding a second air quality station, and then, considering CCS as an alternative, is not really an arduous analysis that they have to do. So where FERC is today is that they are in the early steps of, evaluating what needs to be done to get the supplemental EIS done. That process for other projects has taken anywhere from 4 to 18 months, depending on how much analysis had to be done. It's very hard to predict how long it will take for us, but we don't think we'll land on the upper end of that range, I would say. So when you put all of that together, what are the potential outcomes for NextDecade? The best case outcome would be an overturn on appeal, in which case all of this could be over very quickly. We could stop. We would not have to worry about phase one, and we could move forward with train 4. Our base case, and still a very good outcome, is that we assume we will have sufficient cover during the appeals process to complete the supplemental EIS with FERC and have our order reinstated. And that would not have any impact to timing or cost of phase 1. A worst case outcome would be a situation where, just to make up numbers, the appeals process takes 6 months, FERC takes 12 months, and we have a 6-month pause in construction on phase 1. That is a worst case scenario, and one that, we don't think today that's how this will go. But to the extent any of our forecasts change, we'll definitely update the market. One other thing I'll add really quick about CCS is that we had filed a CCS project with FERC. We are proposing a CCS project for Rio Grande LNG, but that project is very, very early stage and, quite frankly, not ready for FERC to perform an environmental analysis on. It's just not commercially developed enough. So we pulled that CCS application a couple weeks ago, and FERC will still have to consider CCS in its analysis. It will not have to perform a full environmental analysis. It will merely have to consider CCS as an alternative to mitigate liquefaction emissions. FERC has done this analysis for other projects in the past, including Commonwealth, which recently was in the news as well. FERC in the past has shown that CCS is not yet an economically viable alternative for reducing LNG emissions. We don't know how they'll decide in our case, but we would assume they will likely reach a similar outcome. I mean, I think that's where we are, is that it's just not economically developed enough yet to move forward with.
With the election on the very near horizon here, do you see any political regime change, affecting the company one way or the other?
It's a really good question, and I think one that's a little bit hard to answer. But as far as the appellate process and the FERC process, I don't expect any administration to have an impact on that on day one. Things that could have an impact moving forward would be permitting reform. I know that's kind of being talked about in Congress now, and there's a lot of opposition to it, but I think permitting reform, just personally, I think that has to happen at some point in the next few years, especially with the recent Chevron decision. I think it's going to be very complicated for energy and other infrastructure companies to continue to build projects without some sort of permitting reform. But permitting reform would be helpful. Any sort of executive order that was helpful to FERC and its jurisdiction, or restrictive to the jurisdiction of the DC Circuit Courts, might be helpful. I don't know how likely that would be to happen. I do think that after the election, no matter who wins, this DOE exporting authorization pause will go away. I think under a Republican regime, it probably moves faster than under a Democratic regime, but I think under either, I think that goes away.
Oh, that really made some
So
European, it made some European countries quite unhappy that
yes.
moratorium.
Yeah, and we have many, many important allies that are not free trade countries. And so picking non-FTA is not the best way to restrict destinations of LNG if you're going to try to do that. I think this was just, a way to try to, make a debate where there wasn't necessarily a debate about LNG and its benefits globally. We're displacing coal and solid fuels in countries where pollution kills thousands of people, if not more, every year. And that's something that in the US we take for granted because we live in a relatively clean, there's pollution, but not anything like some of these developing countries. And so I think LNG has a really good impact on environmental impacts globally. It has a great impact on jobs, trade balances, energy security. We see it as a win for bipartisan support. And typically it has had that. So I'm hopeful that in the future we'll move back to a place where there is bipartisan support for LNG.
No, listen, we agree. I mean, at ELCO, we are LNG bulls. It's incredible considering, your old employer Cheniere was built to import gas, about 20 years ago. It's the growth of this industry has been just incredible. But, just to be cognizant of everyone's time here, where we're knocking on 35, 40 minutes, maybe you could just give some closing remarks. And again, I really appreciate the time you took today and have this little teach-in with us and really go over what's going on with the company.
Yeah, really happy to do it. I'll start by saying if anyone has any questions after this about LNG or NextDecade, we are always around and happy to answer them. Really appreciate the opportunity to speak to you and your investors today. I think I would just leave you with, despite all of the current things that are going on with NextDecade, I think we're excellently positioned to come out of this incredibly well and stronger than we were before. We will complete phase one. We will operate. We will also move forward with trains 4 and 5. And we think we're excellently positioned to continue to grow in what's a really dynamic and exciting US LNG market.
Yeah, great. For full disclosure, we are current investors, and we find this a really compelling opportunity here at these levels to get in really at the ground floor, the stage one here of construction on your first train. We think this is going to be a real interesting opportunity going forward. So, thank you again, and we look forward to watching the company and everything develop.
Thank you very much.
Okay, guys. Enjoy the day. Take care.
Thank you, you too.